Monday, the 9th of January. Welcome everyone to Frontier Opening Bell. Let's get the first full market week in January started. I am Bosin Amafai, and let's look at the numbers from where we finished off on Friday. The Egyptian stock market, the EGX, roared very strongly, 2.86%. On Friday, on the back of that strong rally that started the first week in January and ended Friday above 16,000, slightly above that on the EGX 30, because foreign investors are bringing cheap dollar into the country. The Egyptian pound, I've seen a correction to the downside, and that makes the stock market cheap for of overseas investors. The Nigerian market was around 51,222. The market bucked the week on Friday by about 0.1%. On Friday, the market returned to some level of profitability of profit index return by 0.7%, roughly third quarter of a percent, as we saw a few gains in the consumer goods space. The BRVM was choppy throughout most of last week. 1.24% was what it booked on Friday, below the 200, held on to 202 when the week started. Tuesday bucked that by Friday at 299.94. The Nairobi stock market, 0.37% in the red, 126.85 was the NSE All-Share Index, and the GSE finished 1.80% strongly on Friday, just as Europe finished slightly in the green, and the US Wall Street was much better, and that's playing into the opening today. GSC finished 76,797. The rand, however, bucked at 17.17 to the dollar on Friday. So let's take that off and just take a quick look at the stories making the headlines. And starting as always from East, where KenGen, which is the power generating company, the leading power generator, is denied. Kenya Power, which is also listed on the Nairobi bourse, 1.7 billion shillings in tariff discounts. It's a bit of a face-off between KenGen and Kenya Power PLC, both of them with government heavy shares in both companies. KenGen wants the whole money on the table. Kenya Power is looking for a tariff discount. An Africa Tech Summit for 2023 is coming back to Nairobi. Congratulations for the 5th edition. That will be next month. It's one of the biggest summit for the technology space on the African continent, sub-Saharan Africa, that is. And the Kampala-Malaba Railway upgrade is going to be completed, according to authorities in Uganda, by February, and that will open the way for more haulage transport in East Africa out of Uganda. And the DRC had a bit of an issue with Equity BCDC reporting accounting problem of about $11 million. That's quite a very hefty amount, if you ask me. But let's see how it's been resolved by the authorities in DR Congo. Let's get on with the West African space, where Nigeria's budget, its ways and means, and all of that was a big issue last week. And just as we're heading for the weekend, the Nigeria Intelligence Financial Unit, the NFIU, issued a statement barring public servants from taking cash out of public sector bank accounts with immediate effect. It's the next level of cash withdrawal limit that the Nigerian Central Bank is implementing. Now the NFIU has added another layer on top of that, preventing any form of cash takeout from any public sector accounts. Some analysts, economists have said this is a great way to contain public finances in Nigeria, curb corruption, mismanagement, and lack of transparency. For escrows, travel allowances, everything has got to be done electronically and cash in hand. Now, Ghana is looking to talk to the IMF under the G20 Common Framework for a debt plan, but the President, Nana Akufo-Addo, did a State of the Nation address over the weekend and has shown in everyone, the Ghanaians in and abroad, that things are going to be okay. In the meantime, Kenya's Cote d'Ivoire's 2023 tax annex will come into effect today, the 9th of January. And Bloomfield Investment Corporation has confirmed AA- rating of the Port of Abidjan in a long-term local currency unit, that is, while the Bloomfield also retained Benin Republic's A rating with a stable outlook. We say Congratulations to Port of Abidjan and the Republic of Benin. Okay, let's start checking with Southern Africa. The mining story is one big story that is still everyone is looking at the outlook for the new year, considering the pushback from Zimbabwe and a few other countries about lithium raw materials exports out of the continent. However, we have a new report tomorrow from the World Bank, which will show that the global recession risk is real and is still out there. Watch out for that tomorrow, Tuesday the 10th, when the World Bank released that economic outlook report. And South Africa and Nigeria are among the top 10 countries most interested in investing in financial markets. That's according to a report. While Zimbabwe's Securities and Exchange Commission has put out new rules for listed companies. It says there will be penalties if they flout listing rules of the Zimbabwe Stock Exchange. The head of the Zimbabwe SEC has been on Twitter, to his Twitter handle over the weekend, retweeting all about this latest move. And again, also encouraging everyone in Zimbabwe to invest in the stock market. Angola has borrowed almost $40 billion US from China in the past 20 years. The highest is the countries with the highest China's borrowing in sub-Saharan Africa. That's according to a Chatham House report. Finally, North Africa. That's where it all starts from, with the Libya joining the International Energy Foundation, while the SPE Capital, which is an investment firm, has bought Vital, which is a Tunisian food supplement company in Tunisia, and that's quite a very good transaction there. ADNOC is looking to spend about $15 billion on energy transition projects over the next 10 years, while Tunisia's central bank has issued a warning, hard times ahead, without a quick fix from the International Monetary Fund. There's been a talk of IMF financing and support for Tunisia for most of 2022 with President Said, but that never really materialized. There have been a couple of IMF staff missions visit to Tunisia. But again, there's still a bit of a political, social issues to deal with that yet to be resolved for the IMF to fully come through to Tunisia's aid. But now the IMF, the country's central bank governor is warning there could be consequences if there is no quick deal with the International Monetary Fund. And that's your take. That's our take on this side. We're handing that over to you to have a profitable business day and the week ahead. I'll see you next time. Bye for now.